Hey guys, what's up? In this video, I'm going over the top 7 tax write-offs or strategies that self-employed people can utilize. As a self-employed person myself, I've taken many write-offs and used many different strategies, saving me a ton of money in the process. If you want to reduce your taxable income legally, then make sure to implement these things right now. All I want to do is help you guys save as much money as possible. So let's get started. First one is creating an S-Corp. A lot of people think that LLCs help with taxes, but that's not the truth. Simply having an LLC means you're still taxed as a sole proprietorship. However, you can have an LLC with an S-Corp election, or you can just go directly into making an S-Corp. Now, when you're doing work as a sole proprietor, 15.3% of your income is going straight to the government as self-employment tax, aka FICA. This is made up of Medicare as well as Social Security. And you'll be paying this 15.3% on all income up to $137,000. After that, it drops down to 2.9%. And there are some more little increases for high income earners. Now, the beauty of S-Corps is that they allow you to reduce how much income you're paying this FICA on. Let's say you make $130,000 in the last year with your business, and you have $30,000 of expenses. This means that your net income is $100,000. Now, if you run that through your sole proprietorship, you're gonna be paying about 15% on that, so $15,000. That's in addition to federal income tax as well as state income tax. So the cool thing about an S-Corp is that you're actually treated as an employee of your own S-Corp. So you choose to pay yourself a reasonable salary and the rest of it gets paid out to you through a distribution. You need to pay yourself a reasonable salary. So let's say out of that $100,000 profit, you set a salary of $40,000 for yourself. This means that you're paying that 15.3% FICA on that $40,000 W-2 salary. But the rest of the money, that $60,000, is going to be paid to you as a pass-through distribution. This means you skip out on that 15.3% tax completely. In this case, 15.3% of $60,000 is around $9,000. So that's how much you'd be saving by treating your business as an S-Corp for tax purposes. Anytime someone is making over $50,000 in profit through their business, I tell them to start looking at potentially creating an S-Corp. You'll save a lot of money in the long run, and this is completely legal. The second really big tax strategy or deduction is writing off your car. What you wanna do is you wanna ask yourself, do you drive a lot for business? You'll likely have a personal car, but if you can actually use that car sometimes for business purposes, then that can definitely be a write-off. There are 2 different ways to take vehicle deduction. There's the mileage method and there's the actual expenses method. Now for this year, for the mileage method, you can write off 57.5 cents per business mile driven. So let's say in 1 year you drive 10,000 business miles using your car. This means that you can write off $5,750 on your taxes. The other method is using the actual expenses method, and this will allow you to write off your lease payments, interest payments on your car loan, gas, maintenance, tires, insurance, and all these different things. You basically add all those payments up and multiply it by the percentage business use. You can even do a Section 179 using bonus depreciation. What this does is it allows you to write off the whole car in 1 year if it's over 6,000 pounds and it's used for business. If you drive a lot of miles but you have a cheaper car, then it's probably better to use the mileage method. If you drive less miles but have a more expensive car, then using the actual expenses method is probably gonna be a little bit better. I definitely recommend talking to your CPA or tax strategist about this because you can save a lot of money. The third thing that you guys can do is actually just hire your kids. This is a very underused method, but you can actually really minimize your tax liability. Here's how it works. You're basically going to pay your children up to the standard deduction each year. When you're doing this, they're not paying any taxes and you don't have to pay any payroll taxes either. This works if they are your own children and they're under 18 years old. Now, you can't just pay them for not doing anything. They have to be doing a real service for your company. For example, let's say you have a YouTube business, right? You could hire them to help you edit videos or do research. This is also really great because it teaches them to do work. And what I recommend doing is paying them out of your sole proprietorship business so you can get this write-off from your own income taxes. Don't pay them directly from your S-Corp. If your kid is over 18 years old and they're an adult, then you'll just issue them a 1099 or a W-2. They still won't pay taxes, or even if they do, their tax rate is gonna be a lot lower than yours probably. And if your kid's already in college, don't pay for it directly. Rather, you wanna pay them and then have them pay the tuition. Fourth tax strategy is to definitely have a retirement plan. There are so many different benefits of investing in a retirement plan. And the most obvious is that you're only paying tax one time. Compare that to a normal brokerage account where you're paying taxes on the money you're putting in and you're paying taxes on any profit that you make. For most of you guys, I think the solo 401k is going to be the best route to take. But you can also do a SEP if you want. So for me, I do have a solo 401k and I'm able to open up one of these because I don't have any full-time W-2 employees. I do have independent contractors that I pay on a 1099, but that still makes you eligible for a solo 401k. Now, when you're choosing to do a solo 401k, you can choose to do a Roth or a traditional 401k. I won't get into too many of the details, but with a Roth, you're paying taxes up front, and with the traditional, you're paying taxes later on. If you have an S Corp, which I definitely recommend most people do, you'll have a $19.5 thousand employee contribution. This is the baseline that almost everyone is going to be able to put in. And you'll have an additional 25% employer contribution. So let's say again, you have an S Corp and you have $100,000 of profit. You're taking a $40,000 salary, so you can put in up to $19.5 thousand as an employee. Since you're also the employer, you can put in 25% of your salary, so that's $10,000. And if you add these two things up, you're gonna get $29.5 thousand that you can put into your solo 401k. This is a really great way to build your net worth, and I definitely recommend taking advantage of these retirement plans. The next thing you guys should definitely do is have a home office deduction. Most self-employed people are going to work from home, and you should probably have a home office. For it to count as a write-off, you have to use the house exclusively for conducting business. So let's say this could be part of your bedroom with a desk, or it could be a separate home office room. It also needs to be the principal place of business. How it works is you can basically deduct a percentage of your housing costs or rent. What you'll do is you'll find the square footage of your home office and then divide that by the total square feet. You're left with a percentage, and you can take that percentage of your mortgage, your rent, your utilities, repairs, all this stuff. You can write this off in your personal tax return, or I've heard this is even better, is to write it off in your S Corp tax return. And you do this as a rental expense. Yes, this could increase your risk for an audit, but just make sure you do it right. You are absolutely 100% entitled to take this write-off. A lot of people are scared, but you definitely should not be scared, as long as you do it right. Number 6 on the list is any education expenses. If you're an entrepreneur, then you probably spend a good amount of money and time on your self-improvement and education. For example, if you guys were to buy my YouTube course, then you can totally write that off. Or if you're gonna buy books, if you're gonna attend seminars or trainings, all these things can be tax deductions. If it contributes to your business in any way, then you can absolutely write this off. And this brings me into my next point, which is expenses. You guys should be expensing anything that is related to your business. And with equipment, the cool thing is that you can write off the whole thing in just 1 year. For example, a computer, a desk, cameras, chairs, all these things you can write off. You can even write off your dining expenses. And there are lots of details that I won't go over in this video, but to make it simple, you can write off 50% of your costs of dining out. This is both when you're talking about business with someone else, or even if you're just eating by yourself and you're traveling. When you travel, you want to spend 4 hours per day or more on business. And when you do that, you can write off the whole entire trip. I'm talking your hotel, your airfare, your Uber, rental car, all these different things that a lot of people don't write off. If you can, turn your trips into business trips. Go look at real estate, go attend a conference, visit a client, or maybe even film a vlog. Now, definitely for some industries, this is easier. For example, YouTube. I can literally go on a trip and start making content there, and that would definitely make it a business expense. Don't be afraid to be aggressive with your tax write-offs. If you can argue that it's for business or it's helping you make money, then write it off. Okay, in conclusion, you guys, taxes are very complicated. The tax code is complicated, but the interpretation of the tax code is even more complicated. As a business owner, you are entitled to take a lot of write-offs that you probably aren't taking right now. And there are so many different tax strategies that you should use as well. Using all these different tricks will heavily decrease the amount of money you're paying in taxes. And you already know this, but taxes are probably your biggest business expense. When you can reinvest the money you're saving on taxes into your business, then that's good for both you as well as the government, because it means that you are stimulating the economy. Anyways, I hope you guys found this video helpful. I'm definitely not a tax expert, but I'm just super interested in different ways to legally reduce your taxable income. If you like the video, make sure to hit that like button and also subscribe to my channel to see more content just like this. I make a ton of content about personal finance, investing, and entrepreneurship. And yeah, I'll see you guys in the next video. Peace.